If you're at Meta making $1.5 million a year, you should not be out there gallivanting around a cabin in the middle of nowhere. You should be working at Meta, getting your bonus and getting your promotion. Like, that's how you make money. And this is just a passive investment that you have a great property that's going to appreciate in value, track inflation, something cool to show your friends and family, and it pays for itself. Oh wait, and it gives you like 6 figures of tax benefits. Like that is the value proposition.
That is a big unlock to a lot of people, right? So can you talk about that tax benefit part?
Yeah. Welcome back to S Tier Like the Best. I'm your host, Michael Chang. I'm very honored again to have my special guest, Liz, join me here in the studio.
Hello.
So today we're actually filming in a proper podcast studio here in the Lower East Side of Manhattan. Appreciate everyone's really nice feedback on the Taipei series we did. So we thought we'd expand it further and just have a lot more conversations with me and Liz, talking about the business, talking about what we're seeing in the market. And, hope you guys find this helpful. If you do, please definitely leave a comment and subscribe. Please feel free to share it with a friend, a real estate investor that would benefit from listening to this episode. So, Liz, episode 4 together.
Yeah, more than 4, maybe 5th or 6th.
5th or 6th, the ones that we did together. So, why don't we start with like a State of the Union? Like today is like kind of mid-October, 2025. Like, what are we seeing in the market right now for short-term rentals?
I mean, we've been incredibly busy since summer, I would say. And I think the market still has a ton of opportunity. Obviously, it's a lot harder than before, years ago, where you can spot a deal fairly quickly. Now you really need the proper analysis, due diligence, all of that tools and resources to help you identify the right short-term rental property.
Yeah, no, I mean, I agree that the market's completely evolved since 2020 and COVID. I would think that was like the last kind of big chapter of short-term rentals.
Yeah.
And then, to maybe just give a brief overview, the market post-COVID, 2021, you literally could do anything and you would make money on Airbnb. Everyone was stuck in COVID and they had all the COVID money and they were traveling. In the last couple of years, things definitely have changed. It's not you throw anything on Airbnb and it makes money. It's a very kind of defined way of doing it in order to make cash flow and have a good short-term rental. But I guess like, what are we seeing in the markets? Like, what are you seeing when we're talking to clients on like maybe price range or parts of the country that make most sense?
Well, from price range wise, and this is just general, what I'm seeing right now is on the higher quality, higher caliber properties, they are doing better. Just from the revenue potential side. Depends on the market. You need the right amenity design to go in, of course, based on your guest avatar, which we look into that from every single property. But yes, from I think around $750,000 to $1 million and a quarter, that's where we're looking at.
Yeah, I agree with that. I think it's around probably a little bit lower. I mean, we have some clients that have bought properties in the 500 range.
True.
I would segment the market a little bit. Maybe it's like 500 to 800 is like one range, and there's certain type of markets for that. There's like the 800 to $1 million, $1,000,001. There's like another type of market, type of product. But where we're seeing like the best deals, to be candid, are like about $1.5 million plus, like these very large statement type properties. And you're seeing really good cash flow from those properties. Like shockingly, actually, for one of our clients that's based here in New York, without disclosing names, obviously, we just talk a little bit about what we found them.
That came at me as a surprise too. Found them a $2 million plus property, but that property would generate with the upside range of 325 to 400. Just depends how they design, operate it, but we have strong comp to support those numbers.
Yeah. You see the stuff around there, and then remember what we saw with the seller. And people always ask us like, well, if it's doing so well, why is the seller selling? Well, the seller sent us their financials, so we can actually see exactly what they've done. And I was shocked to see like someone that owns a $2 million property can operate it so poorly. And when I say so poorly, what I mean like, they did 275 But there was a lot there. There was a lot of low hanging fruit there, I thought.
A lot of meat on the bone just from pricing management without even doing any design change. I think we can optimize the listing just from pricing. And that's not talking about other trigger we can pull yet.
Yeah. So let's talk about the pricing part real quick, right? So I think that's probably $50K of revenue there, like pretty easy, and it's all drop down margin. So maybe just set the table, like what do we see in that? What do we see in the analysis that they shared with us?
Their pricing is too low. They're booked out way ahead. They're booked out till end of year next year.
So why is that bad?
It's not.
It is bad.
Yes, because that tells me the consumers, the guests, they're picking up this reservation because they know you're underpriced and they want to lock it in right now. There are other comparable property near them. They're charging more. So just by doing simple pricing optimization, we can lift at least 10 to 20% on the price.
At least, and 10 to 20% in this property is like, $30,000 to $45,000. And for folks, like this is literally what I call drop down margin. So you're not paying anything more. The mortgage, the costs are all the same. You're just charging more. So that's all money down. That's straight money in your pocket. So
yeah.
And I think this is more like a broader question zooming out. People always ask like, why do people sell? Right? I get that question all the time. This is so great. Why do people sell? And I always tell people it's like they're selling because they either made their money already on it and they have something else. They have some personal issue. People get selling because of divorce, death in the family, lost their job, some exogenous event. But mostly it's like they just aren't operating it properly.
Yeah, or just different financial goals sometimes.
Sure.
Some investor, they're flippers. Some investor, they're buying whole.
But they were flippers, right? These ones are flippers,
they're flipper. They're trying to make their money, and they did significant amount of work, so they should be rewarded.
But they wouldn't be making that much money though. Maybe let's talk about that actually, because I was like very surprised at like how thin it was actually. Well, maybe I'll give the numbers just because I like doing the numbers. Wait, so what did they buy it at? Like 1.9 or sorry 1.75 or something?
Around 1.75.
Yeah, so they say they bought for like 1.7 just to make the math easy. It's in contract right now for 2.1. And remember, like 2.1, they have to pay 6% commission to their selling broker, right? So that's, call it $100,000 right off the top. So let's just make the math easy. Call it the net $2 million. They put 1.7 in, the net $2 million. You might be like, oh, that's great. No, but they actually probably put in $200K worth of work into that property. So they spent 1.7. They did all the work for like 200, and they might net 100K, and that doesn't even count like the carrying costs and the risks and the brain damage of doing all that work. And it's like that. I'd pay someone $100,000 to take all that risk and do it for me. That's such a great deal.
Yes, I think it's kind of like a unicorn. I don't really see this on the market all the time. Yeah, but it can be many reasons. It can be a burnout investor, just like I'm so tired just from setting this up, and I just want a quick cash and then move on to the next project.
It's still $2 million.
Yeah,
right?
it's they still make good amount of money.
Yeah,
obviously it's a lot of work.
It's a lot of work.
Yeah.
So I would say I think one of the biggest things that people make a mistake on is they're always looking for a reason. They're always looking for like what mistake they made or like why is someone trying to. If they're selling, there must be something wrong. And that's really almost never the case. They're selling because they have a reason they're selling. It almost doesn't really matter why they're selling. I remember when we first bought our first property, I was like so obsessed about understanding why someone would sell, and looking at their social media, for example, and seeing like what they do and why they're selling. But now that we've done this now for 7 years, like it doesn't matter actually. It's about that property inspection, what it can do from a cash flow perspective, and that's how you underwrite the deal. You're not underwriting the seller. It doesn't matter. And like if there is something wrong, you should catch it through your
due diligence process.
Due diligence, exactly.
Yeah.
It shouldn't matter at all.
Your
actually.
inspection, due diligence process, you will unveil all of those, and there's another entry point to renegotiate if needed, right?
Exactly. What does that mean, by the way?
So usually after you're under contract, you have an inspection period, and based on which market you are, that period depends, maybe from 10 to 14 days. It's what we're seeing usually. And if anything is wrong, for example, big item like the roof, it's end of its life and it has some damage, and you uncover some water damage leaking into the house, that's a good point where you can renegotiate with seller at the time for seller credits for the repair. Just a quick example.
Yeah, exactly. So, you have some guardrails.
Yeah.
When you buy something, you have the 10 days to go and make sure everything is working, and you're buying what you think you're buying, right? And let's loop back to the first point. So I think we're seeing there's plenty of opportunity in the market. We've helped 25 plus investors in the last few months either sign, they're either in contract right now, or they close and launch their property. So, we've done a pretty good job from that perspective. Without giving away all our secrets, where are you seeing opportunity?
I think there are opportunities everywhere on the East Coast. I would say Pennsylvania has been a pretty good cash flow market for us, and then Colorado has been a really good one for that mid to high price range. Tennessee, still great deals going on. There are more listing inventories for sale, but higher negotiation power.
Yep.
And Tennessee just proven to be such a long history vacation rental market.
Florida.
Yes.
We even got something in California.
Yeah.
Texas, Arizona. What's kind of surprising a little bit is just some of the states that we're not seeing great opportunities. I would say a lot of Northeast states actually are fairly difficult. If you look at, the Vermonts, the Connecticut's, Massachusetts, there's stuff there, but they don't really pencil. I don't know. They don't really pencil.
The price point is higher. Generally for this northern states, and then the property taxes are really high.
Yeah.
And
regulatory too.
And regulatory environment is just more difficult. It's constantly changing.
Yeah.
So there's also a risk you need to calculate into your assumption as well.
Yeah.
So yeah, it definitely is a little harder.
I think it's a lot harder.
Yeah.
And that's why that's why we like this. We own 6 in Tennessee, right? And just there's just more. And we're looking at that part of the country. There's just sort of regulatory certainty.
Yeah, it's almost not like never, but
never say never.
Never say never, but you don't need to think about it all the time. It's changing again. It's changing again. Yeah.
Yeah.
We probably went through one regulation change.
In the Smokies?
Yeah,
it wasn't that bad. They basically they just said, hey, you need to. And that was actually good common sense.
Yeah.
They're like, well, every year you got to pay us $200. And the fire department goes to your cabin to make sure you have fire extinguishers, carbon monoxide, your railings are good, you have your fire extinguishers are up to date. Really common, which I think actually is a good thing. The last thing we want is someone getting hurt for our properties, or moreover, someone getting hurt at someone else's property, and there's bad press about cabins being unsafe.
Given how many,
for everyone.
Yeah, exactly. And given how many people travel to the Smoky Mountains, it's 14 million.
So there is actually I think a good differentiation between good regulation and bad regulation. You want to talk about that a little bit, good regulation, bad regulation?
I think good regulations you can model after some historical proven vacation rental market, such as the Smokies or the Gulf Shore. Those are really long history short-term rental markets. So the regulations generally are very friendly. They are permit process in place and very pro vacation rental business. So, and you pay the taxes, of course, but that's all part of the analysis you need to put in. And then for the bad regulation, I would say some have cap on how many days a year you can actually rent it out and require you to be, for example, a primary resident of the property. Mm-hmm. That essentially make it impossible to run as a full-time short-term rental.
Exactly.
Yeah, so that's just one example.
I think those are probably the worst. I mean, most people don't outright ban it, but they just add a ton of different regulations on, total number of days, average length of stay, you need to be there,
Yeah.
But I think that's where a lot of people have a lot of fear. They're like, hey, well, look at New York City, you can't do it, because we live here in New York City. Everyone says that. Well, New York banned it. Like, so what is it? What's prevent? Like, how do I underwrite that risk? And I always tell people, look, in major cities, you definitely want to be careful. There's just more of a rent control property kind of lobby here. Hotels are a big issue to you. Hotels are actually a really big proponent of short-term rental regulation because they kneecap their supplier, or they kneecap their competitors. So you want to find markets that generally have a lighter regulatory touch. There's a lot of short-term rentals there. Like basically the economy like really rests on tourism, short-term rentals, because if they limit that, then their voters, they impact their businesses, and these people aren't going to do that. And that's really your best defense against being offsides on the regulation side.
Yeah. Then what are your thoughts about some of the unregulated markets, kind of open book, still no regulation in place, and not a lot of competition, what we call the unproven market? We have some clients interested in much more unproven markets. Yeah. How do you look at those markets?
I mean, I think that's a couple ways I would look at it. I think one is if it's completely unproven, right, but it's close by to a regulated market or close by to where there's attraction. I think those are actually like great opportunities that you kind of already proven out that you can generate, a certain amount of revenue and cash flow, and you can get the traffic there. The ones that I'm more hesitant on are markets that are really in the middle of nowhere, or there's just not a lot of density, so it's very rural. And the problem there isn't the amount of money you can make, but the work that you have to do. So who's going to clean it? Who's going to fix it? You need cleaners that are they're reliable, and sometimes things happen, and what's your backup there? You need someone to fix things. You need someone to, fix your AC, clean your pool, change your hot tub water, just things like, so you need infrastructure around you. And sometimes those metrics look really, really good because there is a ton of work that goes into that. So what you're not seeing is all the sweat equity, the sweat investment that the owner's putting in there. And what I think it works actually much better for our clients. So our clients are typically they're high income W-2 earners. So we have clients that are Amazon, Meta, Blackstone, the big banks, big consultancies, big tech companies. They're not really they're not looking for a second job. They're looking for a good investment that takes a little bit of work. They're not allergic to work, but it's a good investment. There's infrastructure there, and they can run it. Property pays for itself, generates meaningful tax benefits for them, so they can offset their W-2 income or W-2 taxes, and have a nice place that they can enjoy, share with their friends. And to be fair, like someplace that's 3 hours in the middle of nowhere, like not really the best fit for our clients. Maybe it's someone that has a lot of time on their hands and just really wants a project.
Or do it full time, really working for that sweat equity.
Yeah.
Build.
But for people that like have jobs and work and have a family, like it's not a good fit. Like your time, how you make money is do your job. If you're at Meta making $1.5 million a year, you should not be out there gallivanting around a cabin in the middle of nowhere. You should be working at Meta, getting your bonus and getting your promotion. Like that's how you make money. And this is just a passive investment that you have a great property that's going to appreciate in value, track inflation, something cool to show your friends and family, and it pays for itself. Oh wait, and it gives you like 6 figures of tax benefits. Like that is the value proposition.
That is a big unlock to a lot of people, right? So can you talk about that tax benefit part?
Yeah. So that's what we've done, and that's how we've been able to really unlock value in our portfolio in a very meaningful way, in a very defined way too. It's not. It's just a tax code. So basically, if you're working full time, you can buy a property and you can take advantage of what's called a short-term rental tax loophole. And what that does is allow you to buy a property and take bonus depreciation against that property, so that you can offset. You buy $1 million property, you can offset probably $300,000 in taxes, protect $300,000 of income. So that's super meaningful. right? So in that example, if you buy $1 million property, right, your loan is say 10% down or 15% down. If you can offset $300,000 of income times the 35% tax rate, that's $100,000. Like you literally got all your money back, effectively all your money back. So you're buying a house with no money in the deal,
which
like,
is super powerful. You don't see this elsewhere.
And the thing is too, it's not like that. If you didn't do it, that money would still be there. Like if you don't do it, that money's gone because once you pay the IRS, like it's gone. So it's capital that you could reinvest in yourself, or it goes away, so it's a zero to you.
Correct.
So I think people don't realize that. They're like, oh, hey, there's a tax savings here. It is, but it's even more powerful because it's not like you can take that income, take that $100,000 and go invest in the stock market. No, that $100,000 goes to the IRS and it's gone.
Yeah, and I think you talk about this. One time you say something about that stick with me for a long time. Taxes is our first or second biggest expense.
It's the first biggest expense.
And a lot of people don't realize it because they think it's just what I should be doing. And the money's gone. They just take it.
Yeah, I mean, I think it's a little bit of the indictment of the education system, how we think. Taxes are taken as a given. But if you can think first principles and take a step back, like, okay, like I'm paying these taxes, but like why? Okay, I mean, I'm saying, you want to support the country and everything, right? But the tax code is constructed in a way to benefit investors, right? And it's just what the tax code says. So if I invest, then it will benefit me, and from a tax perspective. So if you work a wage job, doesn't matter if you are a doctor. We have a lot of doctors too that make $800 million a year. It doesn't matter if you're a doctor, you're a project manager at Meta, anything. You're paying 40%, 45%, 40+% of your income in taxes. And if you can minimize that or eliminate that in some meaningful way, I think how fast you can compound your income, right? And you don't spend 40% on anything. Even your housing costs, most people say 30%.
Yeah.
So your housing, your taxes together, 70% of your income. Now just imagine if you can minimize that 40%, and you can reinvest that into assets that generate cash flow for you, that appreciate for you. Just think how much further ahead you would be in your financial journey, how much closer you'd be to retirement, how much closer you would be to supporting your family, your children, how much closer you would be from not having to work all the time and, I think you and us as immigrants, like go back home and see your family, right?
Yeah.
Like those are things that, like, money is not for the sake of money, but it's like what you can unlock with that. I think that's why you and I are here, like, talking about it, because no one ever talks about this, or people talk about it in a way that I think doesn't speak to, if you have a great job and like you work W-2 and some random schmo on social media talking about it, you're like, whatever, right? But I was on Wall Street for 10 years and I have my MBA from Cornell and a full ride. Like I've like hit all these like credentials that like people understand. So I'm like, hopefully, okay, look, I got the credentials done and I've actually done this now. So like, will you actually listen to me and like keep an open mind? And I feel like that's where the people that keep an open mind are like the 40, 50 clients that we have, and like we help them do this.
Yeah, and it's such a powerful wealth creation and tax planning strategy that school doesn't teach you.
It's the most powerful one.
It's one of the most powerful one, and you really have to learn it. Obviously, it's not like, oh, I heard about this on social media, I think I can do it. There's a lot of steps involved to get you there, the hours you need to put in. It's nothing you want is free, right? You got to put in the time and effort to do it.
And I would say, there's that. And, obviously you can learn what that is. You can use ChatGPT. You can learn the steps, right? But what the linchpin of the strategy.
Yeah.
The most important part is finding the right property that you can hold over the long term, pass to your kids, and get the basis step up, right? Like that is the holy grail of the strategy. Like if you're gonna buy something and sell it in 3 years, like this is not the right strategy for you. So you should go flip a house or do something else. Like this isn't it. Mm-hmm. This is a long term investment for you and your family. Like that's how you can really actually keep these tax benefits. If you intend on selling it quickly and not 1031 to something else, like it doesn't work. So I think we spend a lot of time and make sure we do a really good job. It's like we help it. Okay, what is the right market? What is the right property for you? Not for like the list out there that's for like everyone, right? for you, Elizabeth? Like, what actually works for you based on your budget, based on your goals, based on the amount of time you have, based on the amount of experience you have? Like, that's what we go through with each person to make sure that that the property that they ultimately buy is the right fit for them.
That's why our program really offer a unique solution for these high income professional, which I think I have not seen something similar.
No,
on the market.
Because no one has like done it all. Like no one has done it start to finish, right? You see people that like, you know, maybe are good at one part, not the other part, but it's because it's hard, right? You have to like understand real estate, the tax side. I mean, you gotta understand the real estate side. You gotta understand not like the buying real estate side. You gotta understand the Airbnb side too, like how to like get an Airbnb, how to price it, operate it, design it, all that stuff. Oh wait, and you gotta understand the tax stuff too. And how all that wraps together, because it all is an integrated strategy. You mess up one part, and the other parts don't work. You buy a bad property, you really got an Airbnb and tax stuff, but like the property's bad. Property's good, but you don't want to put an Airbnb. You don't optimize it. You don't make money. That's not good.
Yeah.
You do both of those right. You get the tax stuff wrong. 3 years later, you get a letter from the IRS like asking for a bunch of stuff that you didn't prepare for. So like all those three things, like you have to do it right.
Yeah, there's so many steps involved from the acquisition to the design setup, right? And then you have the operation and management.
Yeah, exactly. So folks, if you enjoyed this episode with me and Liz, again, please let us know. Send us a message on Instagram at Michael Chang B&B, or leave a comment here in the podcast. And we would really appreciate your support. Please like the podcast, leave a comment, and let us know what you'd like for us to talk about. Liz and I have been doing this for 9 years together, so 2 kids, 2 businesses, and we can still sit in a room and talk on a Monday, Tuesday.